What if I told you that a cover call strategy can multiply the amount of dividends you receive by 3, 5, or even up to 9 times what the dividends are? Sounds awesome, right? But what if it's not quite as easy as everyone makes it sound? In this video, I'm first going to briefly show you what a cover call option is in case you're brand new to them. And then I'm going to show you over 5 years worth of cover call history and one of my favorite stocks, MDT. And finally, I'm going to share some tips that I've learned over the past 20 years that I've been trading cover calls. First and briefly, what is a cover call? Where here you see the exact trade when I entered a cover call in MDT. I did that because I've been selling some cash secured put options against it, but cash secured put options, that's a story for another video. But what happened here is I ended up buying 300 shares of MDT at $90 per share. Now simply put, in order to turn it into a cover call, I sell a call option against those 300 shares. Now typically with a cover call, they'll sell the call option strike price equivalent to or above what they bought the stock at, which in this case would have been $90 per share. The problem was that MDT had come way down in price. So I wouldn't get much premium for selling the $90 cover call option. As a result, I decided to play a little more risky, which I'll show you the risk and rewards in just a minute, but I sold the $80 cover call option. What does that mean? It simply means between the date that I did this trade and January 20th, the person who bought these call options from me had the right to call or to buy MDT stock from me at $80 per share. And they could buy it if it was at $100 per share, $200 per share, or at $50 per share. When you think about it, they wouldn't buy it at $80 per share if they could buy it on the open market at $50 per share. The only time this could really give me a little problem is MDT was trading above my $80 cover call strike price. You own shares, you sell someone the right to call or to buy your stock from you. Now let's dig into the main point of this video. How do you double, triple, quadruple, or whatever 9x is, your dividend income? And how do you do that using cover calls? Now I've been in this MDT trade for about 5 years, but I'm going to fast forward to today. Let's see what the dividend is right now for MDT. Right now, with MDT trading for just under $92 per share, the dividend is 3.07% annualized. That means once a quarter, you're gonna get about 71 cents for each share of MDT that you own. So let's go with my 300 share example, because that was my real life trade. I'm gonna show you all the details of that trade over the whole 5 years I was in it in just a minute. But I first wanna show you the dividend. So you have 300 shares of MDT, so you get about $213 per quarter. And since there's 4 quarters in a year, then you get $852 per year. And that's if you own the shares of MDT throughout the entire 12 months. Break that down by month, you're getting about $71 per month in dividends on average for owning 300 shares of MDT stock. Not great. It's a little over 3%. Honestly, that doesn't get me too excited. Here you see all the option trades I've done against MDT over the past just over 5 years. Now, this first section up here was where I sold a whole bunch of cash secure put options, and I collected a ton of premium. Notice over that couple year time frame, and I wasn't selling put options the whole time, just here and there whenever I saw was a good opportunity. Notice I collected right at $5,481 against MDT. And the trade I showed you was the day that it was finally put into my account. So on that day, as you see here on this line item here on my Google Sheets, I bought 300 shares of MDT at $90 per share. And then here's that next trade I showed you. To turn it into a cover call, I sold the January of 2023 $80 cover call option. And for that, I got 95 cents per share. So let's think about this. This option expires in less than a month. I sold it on December 29th, and the option I sold was for the 3rd Friday of January. It's expired in less than a month. And how much did I receive? I received more than the quarterly dividend. I received 95 cents per share for selling that cover call option. And I did this over and over again the whole time that I owned these shares until they were called away from me. The rows here that I've highlighted, this little box here under action, STOC stands for sold to open call. Those are my cover call trades. I'm gonna give you all the totals in just a minute. I first wanna let you see the progression of this trade. And notice that once every 3 months, we did get our dividend. Now you notice here that back in 2023, MDT's dividend was a little bit lower than it is now. It was only at 68 cents per share per quarter. So you see I received that dividend there on April 14th of 2023, and the amount was 68 cents per share. Since I own 300 shares, I got $204. But if you compare that to that first month when I sold that $80 cover call, notice that 1 month I received $257. So I received more in that 1 month of $257 for selling that cover call than I received for the whole quarter of dividends. So that was over 3 times better for that 1 month. Well, as I mentioned, I did that over and over again. And eventually MDT was called away from me. So as you see here, I continued to sell some cash secure put options. Then eventually it was assigned back to me. So as you see here, on October 19th of 2023, I bought 400 shares of MDT at $82.50 per share. Now again, I started collecting my nice dividend. It had gone up a little bit. It was now up to 69 cents per per quarter. So not bad. It meant just for owning the shares, I get $276 once every 3 months. But to sweeten the deal up, I again was selling covered call options against MDT. Now what's interesting is what happened to those covered call options. Because the stock went up, even though I received 94 cents per share for selling that covered call option, it cost me $2.03 per share to buy it back. Now I don't want to be out of pocket for that covered call. So how can I avoid that? Well, I rolled the strike price up from $72.50 per share to $75 per share. But for that covered call option, I received $2.56 per share, as you see here. More than enough to cover the $2.03 per share this covered call option cost for me to buy it back. And I did that over and over again until finally, as you see here on August 17th, of 2024, that $82.50 cover call option was assigned. And by the way, I received $2.71 per share for that cover call. In just a minute, I'm going to show you all the numbers, all the dividends I received, and all the cover call premium so you can compare side by side. But just notice what's happened here. I've combined selling cover calls with selling put options. You see, many times I like to collect as much premium as I can by selling those cash secured put options before I get assigned the stock and turn them into cover calls. That's what you see here. We collected thousands of dollars against this one stock, which at most, this would have been 5% of my portfolio. Many times it was probably 2 to 3%. But as you've seen, dividends, although they do make a difference, if you can collect a lot more by selling covered calls, why wouldn't you do that? Now, it does limit your upside. And that's one thing you want to think about when you're selling covered calls. Whatever the strike price is of that covered call option you sold, just remember that someone can call your stock away from you anytime between the day you sell the covered call option and the expiration day at that strike price. So if you don't want your covered calls called away from you, I'm going to show you how to avoid that in just a minute. But first, let me show you all the details of this position. So we're just looking at the covered call portion of this trade. We're ignoring all that cash secure put option premium. In just a minute, I'm going to show you how to pick your strike price for the covered call options you sell. But let me give you all the numbers here for these covered calls and the dividends we collected because of the shares that we own. So let me zoom in here so you can see this better. So these numbers are net. This is net covered call premium. Notice for just the covered calls that we received, how much we bought them for, how much we sold them for, we pocketed $2,588.04. Now the dividends for the time that we actually own the shares, remember we're receiving that dividend every quarter, total dividends paid to us were $756. That means we received over $1,800 more from the covered calls than we did from the dividends. So what does that mean percentage-wise? We received 342% more from covered calls than we did from dividends. Do you see how you can multiply how much you receive in dividends by doing covered calls? But what strike price covered call should you choose? Let's tackle that next because it really depends on what your goal is. So let's talk through a real life MDT example. Let's say we want to do a covered call at MDT right now. What strike price should you pick based on 3 factors? One is you want to collect as much premium as possible. The second is you're worried that MDT might go down in price. And the third one is you absolutely do not want your stock to be called away from you, but you still want to pocket some sweet covered call premium. Let's talk through how you pick the strike price of the covered call option you want to sell based on what your goal is with the stock, because I get asked that question a lot. Randy, what strike price should I pick? What expiration day should I pick? Let me show you how you decide that based on what your goal is. I'm going to talk through all 3 goals here. The first one is you want to collect as much covered call premium as possible. You're mainly focused on income. So here we're looking at the weekly chart of MDT. This is currently trading for right around $91.72 per share. Now we have a little bit of a wild card here because notice they're supposed to announce earnings on August 19th, and that's in about 3 weeks. If we're only focusing on covered call premium, we'd sell the one closest to at the money. All that simply means is closest to what the stock is trading at. So with MDT trading for $91.70 per share, we want to sell the covered call that's as close to that number as possible. All right, now we're looking at the option chain for MDT, and let's pick which strike price we should sell. Generally, I like to sell my options around 30 to 60 days to expiration. Now, there are situations where I'll sell farther dated ones or nearer dated ones, but generally I'm in that range. And generally I do like to avoid earnings if possible, unless I feel very strongly about a company. But let's just ignore earnings for now. Let's just say we want to collect as much premium and earnings aren't coming up. So we have MDT trading for around $91.75 per share. So what strike price option should we sell? All right, now I've added to all of our strike prices, and notice this little line here where it changes from black to blue. That's at the money. So we could sell either the $90 cover call option or the $92.50 cover call. If we thought MDT might go up a little bit, we might sell the $92.50 cover call. That'd give the stock some room, about 75 cents for it to go up before that $92.50 cover call is in the money. Now, if we're a little bit bearish in MDT, we thought it might go down in price, we might sell this $90 cover call. That's what's called in the money, because it means someone can call that stock from you or buy it from you at $90 per share, which is lower than what the stock is trading at. Now, if you want the most premium, it's going to be the one that's in the money. Notice they're trading for around $4 per share, between $3.90 per share and $4.35 per share. But notice what the annualized return is on that. Notice that my broker's estimating my annualized return on this $90 option, if we receive that premium, is about 14.36% annualized. Now compare that to the one that's trading a little bit higher that's out of the money. It's higher than what the stock's trading at. Notice we get about $2.61 per share to $2.76 per share. So somewhere in the middle there, probably around $2.65 per share. Now that return's higher. It's actually about 17.6% annualized. So that gives us a little bit higher return, but doesn't give us as much protection in case MDT comes down in price. So if you're a little bearish, you might consider selling one in the money. If you're bullish, you might consider selling one just out of the money. And that's if you try to collect as much premium as possible. And of course, if you didn't mind selling your stock a lot lower than what it was trading at, then you might sell one even farther in the money. Let's go back to our chart here. Let's say, for example, we thought MDT would come back down to this area down here. Let's say around $80.50 per share, this previous area of support. And we want to protect ourselves in case that happened. What strike price cover call should we sell? Well, if we thought it'd come way down to $80 per share, we might sell that $80 cover call strike price. And we get a lot of premium for that. But notice the return is not that high. So although we get a lot of premium, around $12.90 per share, notice the return, which is based on extrinsic value, it's only about 4.18% annualized. So not that high. What you're doing is you're getting yourself some insurance. Now, you'd obviously only want to do this if you thought the stock might come down to $80 per share. Because not only would you get to pocket that extrinsic value of around 66 cents per share, but you're covered all the way down to if MDT dropped below $80 per share. So if you were bearish for some reason, you didn't mind the possibility of it being called away from you at $80 per share, you might sell that if you thought the stock might go down. Now I have a whole video playlist dedicated to cover calls if you want to check it out. So if you'd like to see some tips or some tricks that I use to avoid cover calls from being called away from me, even when I sell them lower than the strike price I bought the stock at, check out that cover call video playlist. And I'll leave a link for it down in the description below. Now, what if you were bullish and you did not want your stock called away from you, but you still wanted to pocket some nice cover call premium? What strike price should you sell? Now, remember I told you I like selling the 30 to 60 day cover call option. That generally gives you about the best return. There are exceptions. And I always encourage you to check out your annualized return, but usually around 30 to 60 days is the date's expiration I prefer. So now what strike? Well, let's go back to our charts. Remember, we're looking here at the weekly chart. What strike price should I pick for my MDT stock? Now I've zoomed here a little bit, but we're still looking at the weekly chart of MDT. Notice that overall, it does appear to be in a little bit of a bullish stance. It's making nice new higher lows here. You see our higher highs are going up. We'll have to see where this high comes in at here. But if it continues like it has been, I expect it to be a little bit higher, probably up here, probably close to around $100 per share. Now keep in mind, it is supposed to announce earnings here in a few weeks, but we're gonna act like that's not gonna happen. Because a lot of things can happen through earnings. It can go way up or way down. So we'll act like that's not gonna happen. If it continues the same trajectory, when might it get to $100 per share? Well, if it keeps at this same pace, we use that same angle there, we connect these candlesticks here, then it might get there around, what is that, September 26th? So let's take a look at our option chain. Which option chain should we pick? Remember, we want to collect some cover call premium, but we want to keep the stock. We don't want to call it away if we can avoid that. Now we're back in our brokerage account. Remember the date was September 26th. That's our estimate. If nothing weird happened with MDT, and something probably weird is going to happen because of earnings, let's say nothing weird happened, we'd expect it to get there around September 26th, give or take a week or two. And remember we said $100 is what we're aiming for. We think it might get there if nothing weird happened. So here we see what we get. We get between 36 cents per share and 50 cents per share. So if you go in the middle, it's probably about 43 cents per share. Now, it doesn't pay you a lot, but it's about an extra 3 or 4% for selling this cover call. Remember, it's not going to be challenged unless MDT goes up by about 10 more percent. So you get cover call premium, and if it goes ex-dividend while you own it, you get the dividend, but you also get the benefit of about 9 or 10% of stock price appreciation if it is eventually called away from you at $100 per share. Remember, I said there's a lot of things you can do to avoid assignment, so check out that playlist if you really want to hold on to your stocks. This gives you an idea of what you can expect when you sell cover calls even farther out of the money. But even as far as it is out of the money, notice how it compares to, if we go in the middle there, see that we receive about 43 cents per share. And that's for about 58 days worth. So let's do the math here. Let's see how much that is per quarter. I've done all the math for you. It's about 67.6 cents per quarter. And ironically, that's about what the dividend is. So we're basically doubling our dividend. But remember that cover call we're talking about selling, it's about 9 or 10% out of the money. So it lines us up for some nice stock price appreciation. Now let's put this all together. How much could you possibly receive by selling cover call options, especially if you're focused on collecting as much cash as possible? Well, now I'll switch back to the August 15th expiration day. These options expire in about 23 days, so less than a month. Let's look at the cover call return for the one that's closest at the money. Remember, MDT is trading for around $91.78 per share. So we'll look at the $92 cover call strike price. The bid is around $136 per share and the ask is around $167 per share. So we'll just say around $1.55 per share. And that's for 23 days. Matter of fact, I'm gonna pare it back. I'm gonna go even more conservative. I'm gonna say we do this once every month. And that still may be aggressive, but let's just say that. So if we could get $1.55 per share for selling a just out of the money cover call option, that'd give us about $4.70 per year, and that's per share. So I did 155 divided by 30 days, and to annualize, I multiplied by 365 and then divided by 4 quarters because we're comparing this against the dividend. So each quarter in cover call premium, this is saying we get about $4.70 per share. Now, I personally still think that's a little bit high, and it's pretty much because earnings are coming up. You get paid more for that month because the market expects more volatility. But this gives you an example, hypothetical situation. So $4.70 per share per quarter. How does that compare against our dividend? Well, if I do the math here for you, $4.71 per share divided by the dividend of 71 cents is over 6 times what the dividend is. Now let's just discount that. Let's say it's so high because of earnings, and I agree, it is elevated because of earnings. But do you see how selling cover calls and stocks you own can generate a lot more cash than just the dividend? Even if you sell them out of the money, like we did that $100 strike price, you still could pocket some decent premium. Selling cover calls against shares you own is a great way to increase the amount of dividends you receive in that stock. As you've seen, it can really multiply or amplify how much cash you receive for those same shares you own. You can cater your cover calls to what your goals are. Do you want protection, or do you want to collect as much cash as possible? Or do you want to set yourself up to receive cover call premium but still benefit from stock price appreciation? You can cater it to what you want, which is what I really like about cover calls. Jay Jackson, a viewer here on YouTube, thank you, Jay, for the question. It's a really good question about cover calls. He asked, how do you deal with a situation where you have shares, you sold cover calls against it, but you don't want the stock called away from you? Jay, and for all of you cover call lovers, I have a whole video playlist dedicated to cover calls. So I'm gonna leave that link just above me as well as down in the description below. It's called Cover Call Option Trades Explained with Real Life Examples. So if you'd like more details about how I adjust these cover calls and trade them, check out that video playlist. Until next time, happy investing, and we'll see you again soon.